What if I told you there's a stock that returned over 1,000% in just over a year? A company that went from $3.47 to over $61 per share, outpacing almost everything in the market. But here's the catch. It's never made a profit and burns through $200 million in cash every year. Welcome back to the channel. Today, we're diving deep into Rocket Lab, the little New Zealand company that's become the world's second most active orbital rocket launcher. With a current market cap of nearly $30 billion and a stock price that's been on an absolute tear, everyone's asking the same question. Is this the next SpaceX, or are we looking at a spectacular crash landing? Stick around, because by the end of this video, you'll know exactly what makes Rocket Lab special, what risks you're taking on, and whether this high-flying space stock deserves a place in your portfolio. The Peter Beck Story. Let's start with the man behind the mission, Sir Peter Beck. And yes, he was actually knighted in 2024 for his contributions to aerospace. Beck's story is remarkable. Born in New Zealand, he's completely self-taught. No college degree, no aerospace industry connections. He founded Rocket Lab in 2006, armed with nothing but determination and engineering talent. While competitors were raising billions and burning through cash, Beck focused on execution. His philosophy? Out-innovate and out-hustle rather than outspend the competition. And it's worked. In 2009, Rocket Lab became the first private company in the Southern Hemisphere to reach space with their Atea-1 rocket. But Beck isn't just a visionary, he's obsessed with delivery. He's been quoted saying the company is literally sleeping in the factories to meet their ambitious launch timelines. That hands-on, no-nonsense approach has set Rocket Lab apart in an industry littered with failed ventures that had more funding but less focus. This leadership matters, especially when you're considering investing in a company that's still burning cash and chasing profitability. The Electron Success Story. Now let's talk about what's made Rocket Lab successful, the Electron rocket. By 2025, Electron has completed over 70 successful missions, making it the second most frequently launched small orbital rocket in the world. Even more impressive, the company maintained a 100% mission success rate throughout 2024 and into mid-2025. In the rocket business, reliability is everything. Electron has secured major contracts with clients like Japan's IQPS for 8 dedicated launches, and even launched the first-ever mission for the European Space Agency. They've successfully deployed entire satellite constellations like Kinéis. And the business is growing fast. Second quarter 2025 revenue hit $144 million. That's 36% year-over-year growth. For the full year 2024, Rocket Lab brought in $436 million, representing 78% growth. They're also seeing margin expansion. GAAP gross margins reached 32% in Q2 2025, up 650 basis points year-over-year. So while they're not profitable yet, the unit economics are heading in the right direction. The stock performance. Let's talk about what's really caught everyone's attention, the stock price. From April 2024 to October 2025, Rocket Lab stock delivered a mind-blowing 1,055% total return. That's nearly 11x your money in just 18 months. The stock went from a low of $3.47 to a peak of $61.65. Year-to-date for 2025, the stock is up 145%. That's the kind of performance that creates millionaires, but also the kind that can lead to devastating losses if the momentum reverses. Here's an interesting stat. Over 52% of trading days have been positive, with an average daily return of 0.68%. This is a stock that moves, and moves fast. But here's what you need to understand. This performance has pushed valuations into the stratosphere. We'll get to that in a minute, but first, let's talk about the elephant in the room. The cash burn problem. Despite all this growth and excitement, Rocket Lab has a serious cash burn problem. Over the past 5 years, the company has posted a free cash flow margin of negative 54%. In Q2 2025 alone, they burned through $55 million in cash. That's an annual run rate of about $200 million. Now, they're not going bankrupt tomorrow. The company currently has $754 million in cash on the balance sheet, which gives them roughly 40 months of runway at current burn rates. Analysts aren't expecting profitability until 2026 or 2027 at the earliest. This is crucial for investors to understand. You're not investing in a cash-generating business today. You're making a bet that Rocket Lab will successfully transition to profitability before that money runs out, and that the path there won't require massive shareholder dilution. The Neutron game changer. So what's going to change the game for Rocket Lab? One word: Neutron. Neutron is Rocket Lab's medium-lift rocket, designed to compete directly with SpaceX's Falcon 9. This is a massive step up from Electron. We're talking about 13,000 to 15,000 kilograms of payload to low Earth orbit. The rocket features some seriously innovative technology. The first stage is reusable with unique hungry hippo fairings. Essentially, the rocket catches its own nose cone mid-flight. The Archimedes engines produce 165,000 pounds of thrust. This is cutting-edge stuff. And here's where it gets even more interesting. Neutron has already secured major contracts before it's even flown. The U.S. Space Force awarded Rocket Lab a spot in the $5.6 billion NSSL Phase 3 Lane 1 program. That's not a typo. Billion with a B. They've also got a multi-launch agreement with a confidential commercial constellation operator and a $24 million contract for upper stage development. There's even potential participation in the $175 billion Golden Dome program. These defense contracts provide revenue stability and open up massive growth opportunities. In August 2025, Rocket Lab opened Launch Complex 3 in Wallops-Island, Virginia, a $50+ million facility ready for Neutron operations. Peter Beck says they're targeting a late 2025 launch, though industry observers think early 2026 is more realistic. This is the catalyst everyone's watching. A successful Neutron program could transform Rocket Lab's financial profile overnight. Market opportunity. Let's zoom out and look at the market opportunity, because this is why investors are so excited. The global space economy is projected to hit $936 billion by 2035, growing at 7.6% annually. The small satellite market specifically is expected to grow from $8.45 billion in 2024 to over $25 billion by 2033. That's a 12.45% compound annual growth rate. What's driving this? Multiple factors: satellite constellations for broadband internet, Earth observation and climate monitoring, defense and national security applications, and the rise of commercial space services. Rocket Lab has positioned themselves in a sweet spot. While SpaceX dominates overall launch capacity, they accounted for 86% of total launch mass in 2024. Rocket Lab has carved out a profitable niche in dedicated small satellite missions. What's their competitive advantages? Dedicated launch flexibility versus SpaceX's shared rides, vertical integration from satellite manufacturing to launch services, proven reliability, and geographic diversification with launch sites in both New Zealand and Virginia. The valuation question. Now we need to talk about valuation, because this is where things get uncomfortable. Rocket Lab currently trades at a market cap of $29.65 billion. Let's put that in perspective with some key metrics. Price to sales ratio, 29 times. That means you're paying $29 for every dollar of revenue. Enterprise value to sales ratio, 44.7 times. Price to book, 36.9 times. These numbers are stratospheric, even by growth stock standards. The aerospace industry average is nowhere near these levels. The market is clearly pricing in massive future growth and margin expansion. Wall Street analysts have a moderate buy rating consensus with price targets ranging from $18 to $60. The average target is around $42 to $50, which actually represents potential downside from current levels. Some valuation models suggest even more caution. Discounted cash flow analysis indicates a fair value around $15 per share. That would mean the stock is trading at a 249% premium to intrinsic value. Now, valuation models can be wrong, especially for high-growth companies, but these numbers suggest there's very little margin of safety. Everything needs to go right for the stock to justify current prices. The investment case. So what's the verdict? Let's break down the bull and bear cases. The bull case is compelling. Rocket Lab has a clear number 2 position in small satellite launches with an expanding addressable market. Neutron represents a massive catalyst that could dramatically expand revenue. Growing defense contracts provide stability and growth opportunities, and their vertical integration creates competitive moats and margin expansion potential. And most importantly, they've proven they can execute. The bear case is equally serious. Valuation is extreme with limited margin of safety. The company burns substantial cash and may need dilutive equity raises. Neutron carries significant execution risk. Delays or failures could derail the growth story. SpaceX and other well-funded competitors pose ongoing threats, and the path to profitability remains uncertain.
Here's my take. Rocket Lab is a legitimate business with real revenue, real contracts, and real technology. This isn't some speculative space startup with nothing but PowerPoint presentations. But at current valuations, you're paying top dollar for perfection. Conclusion. Rocket Lab embodies both the promise and perils of investing in the new space economy. The company has demonstrated remarkable execution, built a strong market position, and positioned itself to benefit from massive growth in satellite deployment and space services. But current valuations leave little room for error, and the path to sustainable profitability remains uncertain. Key catalysts to watch: Neutron's first flight in late 2025 or early 2026, Q3 2025 earnings and cash flow trends, additional defense contract wins, and updates on their path to profitability. The space economy is no longer science fiction. It's a rapidly growing reality. Rocket Lab has proven it can compete and win. Whether it can deliver returns that justify today's valuations? That's the question every investor needs to answer for themselves. I am not a financial advisor. This video is for informational and entertainment purposes only and does not constitute financial advice. Consult a licensed professional before making any investment decision. Thanks for watching. If you found this analysis helpful, smash that like button and subscribe for more deep dives into high-growth investment opportunities. Drop a comment below. Are you bullish or bearish on Rocket Lab? I'll see you in the next one.